All right. Hey guys, Brad here at Elliott Wave Made Simple. And today we are going to take a look at crude oil and try to get a handle on what we can expect to see this week. Let's dive into the analysis. All right. So we're going to take a look at the daily chart. And as I zoom out here, what I really want to point out is that we are moving in threes. And given the fractal nature of markets, I mean, if you really want to get philosophical, you could say the fractal nature of the universe. But we don't want to go down that rabbit hole right now. The fractal nature of markets is that price waves tend to be self-similar at scale. So in this case, the larger structure is moving in threes. So we can expect the subwaves or the internal structure to also be moving in threes. And that's what we're seeing. So from this zoomed out perspective, you can see the threes here: ABC, 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 and currently working on another A wave, soon to be followed by what would be another B wave, and then another C wave up. Well, LA wave helps us to understand the nature of certain wave types. So we know that 5-wave moves can be a C wave. A 5-wave move can be, of course, a standard impulse. And a 5-wave move can also make up an A wave. But A waves can be more variable and absolutely can be composed of a 3-wave move as well, such as the case with this A wave right here. So just to keep it really simple, just know if the larger structure is moving in threes, we're going to see a lot more threes on the lower time frames on the smaller degree structures. So on the daily, you can see all of these 3-wave moves. Let's drill down, take a look at the 4-hour. And here we can actually see some volume bubbles that I like to look at. A lot of times at tops, you get these candles that have an extreme amount of volume in them with buying. So tops, it's really remarkable, are often marked by excessive buying. And when you run out of all those buyers, there's nobody left to buy. So the price is going down. Also profit taking. It's a bunch of reasons, but I love this visual indicator of volume to just sort of give you an idea of what you might be able to expect. Now, what we're getting over here are shallow pullbacks, sideways moves after massive buying. We couldn't get any downside traction in here. And then now we had another move up, again with massive outsized buying on some of these candles. But that buying has abated, and price has been kind of chopping in a range here. But the way I tend to view this, now I'm not trading specifically on only volume. I'm using a bunch of things. But in this example, there is not an excessive amount of buying here, which just the way I'm looking at this allows for price to move higher because you haven't tapped out all the buyers like you have around this cluster of volume and around this cluster and around this cluster. And these clusters have only led to either shallow pullbacks or sideways chopping action, and it's very consistent. We have 3 examples of this sideways chopping action as we keep grinding higher. And price continues to move in threes. Let's drill down one more level. Now we're going to get a little bit more actionable. Now, there's a lot to talk about on this 1-hour chart. I'm going to keep it simple because really what I'm most interested in is what is most likely over here in this area where we currently find ourselves. But we have to look at the context. So if we go back to the last important low at 72, I was counting that originally as a 1, 2, 3, 4, 5, but proportions got a little out of whack over here. And I don't want to go down in the rabbit hole of Elliott wave and explain all of this stuff because I could spend an hour just talking about the different measurements and so forth in this area. But what I will say is it appears to be moving in threes still. And the way you can count this is in threes, because if it were a 5-wave move, the proportions would be playing out as such. Now, you could count this as a 5-wave move. I'm talking about the white 5, the Roman numerals in white here, 1, 2, 3, 4, 5. And did that measure reasonably well for a 5-wave move? And the answer is yes. But what did not measure well at all is after the 5-wave move, you would get a pullback that should be deeper than this pullback. So to me, that started cluing me in on the idea that this, what I originally had labeled as a 3-4, may be an AB with a C wave yet to come. And that is the way I'm counting this. So I'm actually going to take this moment right here to remove that 5-wave structure and consider this smaller 5-wave structure as an A wave with a B wave pullback. And then now we are in a C wave. Now these blue fibs right here are measuring where you could reasonably expect the C wave to terminate. Now, originally, when price first made it up to here, I was thinking maybe that's it. Maybe that's all you get. But after a 3-wave correction, it did not continue lower, which is what you could expect if this really had topped out here as a C wave. So that is what is giving me the idea that these extensions in blue are where a C wave would typically extend to. So we've already come up and achieved the minimal expectation for a C wave, but because this pulled back correctively and did not continue below this level and is now moving in threes again, going higher. Yeah, we did have a pullback, but I'm viewing that as part of the C wave of this move up. So I still think there's higher yet to come. If I'm wrong, price is going to continue down and get below 82.47. If this is not going to go higher immediately, we're going to know, because early in the week it's going to come down here and break. Just call it 82.50. And the ceiling, we made a new high, but I've been talking about the same levels for a week and a half now. 84.50 to the top side, 82.50 to the downside, with an eye on these blue fibs, which are giving us targets for an extension of a C wave. So, I think the 100, it's already proven to us that is not the top of the C wave. Doesn't mean it's not going to come down, but if it does, something else is going on. But I don't believe this is the top of the C wave. I think this other zone up here is much more reasonable to expect this week to see if price can hold support and get higher. And the ideal target would be this 1382 move, which would be 86.72. So just call it a dollar range between 85. Actually, I just noticed that's exactly a dollar. 85.72 to 86.72 is a realistic target zone as long as we stay above 82.50. Okay, that's a pretty good piece of information right there. So I'm going to repeat it. As long as we hold 82.50, I think it's reasonable to look for 85.72 to 86.72. I've been looking for a more meaningful pullback, honestly, for a couple of weeks, and the pullbacks are stingy. Just a sidebar, just a note. So, the floor, we just created a new floor at 82.50. The previous floor was 80, call it 80.20, 80.18, 80.24, bunch of different confluence of levels right in here. That obviously held. We got above this level and then back tested it, and now we're banging into the ceiling again. So we've already come down here to back test that level. So Now let's drill down one more level. Here we are. A wave could be A, B, C. So we'll get the final thrust up will also be in a three-wave move. So, I mean, it turns into a lot of gobbledygook in here if I start labeling everything. So to keep it really simple, A, B, and this is 1, 2 of C. Here, let me just label this. If this, and forgive me, my degrees aren't right at the moment. Bop. And I know that degree is not right. Let me just, I'm not so great on my degrees because to my way of thinking, it doesn't matter. I mean, it matters, but for the labeling purposes, as long as you understand what the construction of the waves could be. And so inside of this third wave, this could have been an ABC, because when it's moving in threes, even the C wave the internal structure can be composed of threes, like so. So then what that would allow me to think now is another ABC for this fifth wave, something along the lines of this. All right, so if this is an AB, let's go back to the lower time frame. This final wave up is going to be composed of 5 waves. And this is a really cool feature of Elliott wave, is once you understand the character of the various wave types and how they are typically composed and what the subdivisions should be, and I'm just going to put the ABC on here, you would know that a C wave should be composed of 5 waves. And those internal waves, and again, this C wave is going to extend likely. So just for now, I haven't dialed this in exactly. I'm not going to eat up time on the clock right now doing that. But just to keep it real simple, because I'm going to adjust these targets in time to keep it very simple, we are looking for 5 up and a 3-wave pullback, and then a continuation that breaks the high of wherever the 5-wave up terminates. That is going to be a fantastic clue. And from there, I will be able to project and dial in a more precise target area. Although I must tell you, on the 1 hour, I think this is a very decent target area. Just call it 86.72. So you can see 86. I got to redo. I'm going to have to redo the fibs on this lower time frame, this 21-minute chart, because I haven't yet. But the main point that's important is if this low is going to hold, we're going to see 5 up and a 3-wave pullback, because this C wave is going to be composed of 5 waves very likely. And if it's composed of 3 waves, we're still going to know that because of the parameter, because of the measurements that we're able to glean once this fills out this area with more price action. And what if it comes down lower? Okay, fine. If it comes down lower, wherever the support holds, if it wants to come down lower, let's say it comes down into here, the game is going to be the same. As long as it holds 82.50, actually, let's lower this floor on this time frame to 82, roughly 82.50. Where that low is actually whatever it is, 82.46. Yeah, 82.46. So technically 82.46 is the exact penny of where we do not want to see. If this wants to come down into here, we do not want to see it break 82.46, or that opens up a different can of worms. So, is this a reasonable target for a B wave between the 618 and the 764? You bet it is. Another clue is the kind of reaction that we had. Now, I haven't done any work on this time frame, but I'm just zooming in because I want to look at the substructure of this little wave right here. And at these lower scales on a 5-minute chart, the measurements, you can allow for less standard looking measurements on the lower time frames in Elliott wave. but I measure stuff anyway, just to see what it may project to. And you can get these wild extensions on the lower time frames, no problem. Doesn't bother me at all. It's really the structure of price that I'm more interested in. So, man, we did end the day with a very nice reaction from a very nice fib level. So, I mean, this is extended quite a bit. Now, this is kind of nutty to be measuring for Elliott wave on a 5-minute chart. But what I could see, any of this could be a 3-4. So just to keep it real simple, this could already be 5 up, actually. So here's what I do. I'm showing you what I do when I'm actively in a trade. And yeah, I'm down here on these smaller degree levels, measuring stuff, looking for clues. So if this is the bottom of a microwave 2, and now I don't know if this is topped or not right there. It doesn't matter. My way of thinking is this is going to give me some parameters so that I can make educated guesses about what is happening next. And so let me expand these a little bit here, because the main difference between a wave 2 and a wave 4 is how deep it gets and the structure of it. So if we open, whatever happens, wherever this tops out at and starts coming back down, I'm going to be looking for a 3-wave correction, and I'll be considering it either as a wave 4, which means it's going to be shallow and probably terminate in here somewhere and give you one more high. And then I'll measure again. I'll move up the tool, and then I'll be expecting a deeper pullback for a wave 2. And that's going to be the first clue that we are in the final move up in a 5-wave structure of a C wave. And it might play out in 3 waves, but C waves are typically 5 waves. So that's what we're going to be looking for on a nano basis, is the first 5-wave move up. All right. So this is crazy stuff in here. Really requires a lot of attention and a lot of changing of the chart. A 1-hour chart is really much better to view the overall structure. For scalping wise, yeah, we live down here. Scalpers live down here on these lower time frames. And hey, since I'm talking scalp, and if you're watching this and you're in Armando's club, you're gonna recognize exactly what I'm about to do. Just find a swing high, find a swing low. And I've already got Armando's fib set up. By the way, if you're watching this from YouTube and you found this video and you're wondering who Armando is, he has a trading club called the Professor Trades. Incredible teacher. If you have issues with blowing up your account, if you have issues with taking gains, if you have issues with moving your stop loss around, if you need a better way to look at structure of price, I highly recommend that you join Armando's club, the Professor Trades. All right, so here is Armando's fib. So what we like to do is find the 618, mark it up, pay attention to it. Those are typically impactful levels, and those levels price loves to react between the 618 and the 886. So wouldn't it be cool if this really is a wave 3 here and it tops somewhere shy of the 618 and you get a wave 4, and then it can come up and get up into this zone, then get a proper nice wave 2, which would be buyable for long, and you put your stop below 8307. All right, now I'm talking too much. This video is already too long, but that's the deal. So this is what I'm looking at right here. Does this low hold? This is the real floor. Can it come down lower? Yes. Looking for a 5-wave structure with a 3-wave pullback, and the ultimate target is really on the 1-hour chart, which is these blue fibs for a typical C wave extension. Call it 8672, 8572. All right, guys, that is the deal. Now, if you're finding value from these videos that I'm making, be sure to subscribe, be sure to like. The reason I'm saying subscribe is if you get into a trade and you're looking for continual guidance, whether it be crude oil, the NASDAQ, silver, gold. I'm branching out into a few other additional instruments. This is the place to be. I'm updating charts a little bit more frequently than I have in the past, covering more instruments, producing more videos, and hopefully be finding value in this. Come check us out in Armando's Club, the Professor Trades. The links are in the description of this video and all of my videos, and you'll get to know a lot of us in there. We're in there every day. Armando's leadership is fantastic, especially if you're struggling with the psychology of trading. You're going to learn a ton, I promise you. And in fact, you're going to learn a lot for free in his YouTube channel. So that's a great place to start. Go in there, watch the videos, learn how to find these levels, find these zones. And of course, I'm always going to be sharing my Elliott wave view. We also do volume work. There's some members in there that are keen on volume. I pay a lot of attention to volume. I do like the idea that price is king and the structure of price is really the most important thing. But the other tools like volume and a few moving averages, some simple things that you can blink on and off. Other members are sharing their tricks and their tactics, their successful ways that they trade, they're sharing in the room. So you're going to learn a lot more than just about levels. But I think the foundational thing that you're going to learn from Armando in the Professor Trades is the psychology aspect of it, which is huge. So check us out. All right. Thanks a lot for watching, and I will see you on the next one. Bye-bye.